Hi everyone, this is Constance from Zuva. Today we're going to talk about the tax planning opportunities available to medical practitioners. As we know, doctors are high net worth income earners, and that means that there are a lot of aspects which need careful planning together with their accountants in order to optimize their tax planning. Now, an important issue is their tax liability and how they remit their returns to SARS, as well as how they pay their income tax. Now, everyone has a statutory obligation to pay their income taxes, and that is a known fact, but the how and the detail is what we want to talk about today. So we'll talk about provisional tax, and this is a method of paying the income tax liability to ensure that the taxpayer does not have a large debt at the end of the year on assessment. And usually if there's a large debt and one has not paid income tax at all, anything towards that their income tax liability during the year, it will attract penalties and interest on the debt. So it is good to find or utilize a mechanism of paying tax, some form of tax during the year. Now, provisional tax is not a separate tax from income tax, but it allows the taxpayer to spread their taxes over the relevant year of assessment. And it is provisional taxpayers are individuals who receive income other than remuneration, or normally what we would call salaries. Now, most salary earners are not provisional taxpayers if they have no other sources of income. The South African Revenue Services, or SARS, requires provisional taxpayers to pay at least two amounts in advance during the year of assessment based on estimated taxable income. A third payment is also available as an option after the end of the tax year if you think that you've underpaid on the provisional tax to date. And then on assessment, the provisional tax payments will be offset against the liability for normal tax for the applicable year of assessment. It is important to be as accurate as possible in estimating your provisional tax payable, because if you're not accurate and let's say you've under-declared your provisional taxes, a penalty will be levied if the actual income tax payable is significantly more than the taxable income estimated on the second provisional tax return. And there's formulas that your accountant will help you to calculate how much that potential penalty is going to be. So the penalty amounts depend on whether the actual taxable income is more or less than 1 million. And in addition, interest will be levied on the understatement. So you want to save on unnecessary expenses by being as accurate as possible. The second type of tax is called pay as you earn, or PAYE as it is normally referred to in South Africa. And this is a mechanism for SARS, which is the Revenue Authority, to collect income taxes from employees during the year. If you are an employee, this means that your employer will deduct a portion of your salary each month to cover your income tax liability. This system is designed to make it easier for you to pay your taxes throughout the year rather than having to pay a lump sum at the end of the year in question. And the question is whether it is better to pay provisional tax or PAYE, particularly with respect to medical practitioners, as we alluded. Now, the question is of whether it is better for doctors to be provisional taxpayers or PAYE taxpayers needs careful consideration, and there are pros and cons for each. Now, if the doctor is disciplined and they know that they can pay their provisional taxes, then perhaps that's an option that they should consider. To do this, they must set aside an estimated amount for provisional tax every month. Given that the amounts may be significant, this might be a good idea because they then get to invest the funds during the 6 months and earn a nice little bit of interest. And ideally, they would invest their funds in short-term bearing interest, and then pay their income tax at the end of 6 months, but then this is after they've earned some interest. So it makes financial sense for them to do that. The con, however, is that the doctor might not be disciplined and in terms of setting aside funds, and this might result in them not being able to meet their obligations when they need to actually pay their taxes. So I would say self-knowledge is very, very critical in this case. And therefore, if you prefer the monthly discipline of setting aside money and paying to SARS, then rather pay PAYE and declare your taxes on a regular basis. By the way, if you are self-employed as a medical practitioner, you don't necessarily have to pay yourself a fixed salary every month. You literally can, with the help of your accountant, calculate an amount every single month. And what's nice about most payroll systems these days is that they will be able to play catch up, as it were, in terms of the cumulative PAYE that you should have paid by the end of each successive month. I hope this has been insightful. If you still have residual questions, please feel free to reach out to us. And these are our details, and I look forward to hearing from you. It's bye for now.